The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday the 28th of January, just about to wrap up the month. Dow's up 80 at 44,795. This is going to be very important because under other circumstances, in the Chapman Wave methodology, this is so simple. It's one of those times where you can make it difficult, you can make it easy. And this was one where, fortunately, it became kind of easy once we got in. Look at this. Chapman Wave methodology, we try to identify the low bar, then we count each successively up a higher peak, alphabetize them sequentially on the way up, and use uppercase, and on the downside you use lowercase. And I anticipate that in the Chapman Wave methodology, you can only go to the seventh highest peak G, alphabetize A, B, C, D, E, F, G. At G, if you go higher than that, you have to see if you've got an instant restart. There are other ways of looking at it, but there's never an H. So that's the point that I've been, since I developed this years ago when I was using graph paper, engineering graph paper, and a pencil and a ruler. And then it was a very big ruler when we got to those very high numbers. And then when we got automated with the computers back in the late 80s, 1980s, of course, things changed. So D is the fourth highest peak is the objective. And if there's a buy signal that gets upgraded to a buy mode, inevitably, there's going to be at least four higher peaks. There wasn't at the 45,073 high on the 4th of December, which in fact is very all-time high, and it doesn't make a peak D or higher, D, E, F, or G. It's unusual. Anyway, we came tumbling down to 41,844 on the 13th of January, that morning, early morning, before the open. We went long, a little aggressively, small position, but aggressively long, 3 times long. And we've held that position. Yesterday morning, I thought about it, I deliberated, and I thought, there are other things that I need to do, and we were about to be stopped out of some positions for a small loss, and I thought, I just cover that, don't get too carried away. But I really wanted to add yesterday morning to a position we were already in from October of 2022, and have traded in and out ever since, but kept a core position. But I didn't. So that was a failure on my part because it was a really good opportunity, and we would have got it almost at the open. Now, what's really interesting is we've gone to a leg C. Look at the left side of the Dow, 45,075. We're at 44,765. 300 points below? 200 points? Yeah. I mean, an eye blink away from making an all-time high. The price is way over the night. There's the daily chart. I'll get rid of this. The price is way over the 9-period moving average. I love that. The MACD, look at the histogram. It's still expanding. That's the distance between the 9-period differential and the 26-period exponential moving average. The gray line, that's the relative strength index, is good. It's not as great as it was going to the high of the 4th of December, but it's still very good and rising. The stochastic's flat at 97.79%. I mean, more than that, that's fantastic. Hardly. There was once I saw 100.73 or something like that. I've never seen 100% on the stochastic, and I've been looking at this daily, intraday, whatever it is, for, decades. So this is when it's flat and holding in the 90% area, let alone 97%. That is really good. So, and on balance volume hasn't gotten overbought yet. That's the blue line. And look at the weekly chart. If the stochastic in the next week or two crosses positive, you've got a whole new push to the upside in the weekly chart of the Dow. So you go step by step. It hasn't done it. So that's a negative. The stochastic's down to 51%. It hasn't gone to 80% or more. That's a negative. The on-balance volume is rallying, and it hasn't gone overboard, so that's a positive. The 9-period moving average on that big pullback, another reason why I had no excuse why not to go long, to add to the longs yesterday in the Dow, was because look at the candles. 1, 2, 3, 4, 5 out of 5 weeks. 5 of the candles went below the 9-period moving average, below the 14-period moving average, and the 9-period moving average remained green. That usually acts like a springboard to the upside, which it has. Monthly chart, nothing to see. Everything here is positive, and the stochastic's flat at 91%. So I look at this and I say, are we looking at one-offs? In other words, that whole story, with DeepSeek, is this going to evolve into something that's a little bit different that Sunday night into Monday morning was presenting, and that it'll be resolved in a certain way? Or is this something so serious? I've spoken about this on my show ever since I've been here at TFNN, and I talk about leapfrogging. Netflix leapfrogged anything in the competition. It just came up with something that was so unusual, so cutting edge. Airbnb came up with something so cutting edge. Uber, so cutting edge, that you've got to respect that this leapfrog turns things upside down for a little while, and then it becomes normalized. So as I'm looking at this, the most important thing that I'm looking at is that the Dow 30, the mix of the Dow 30, and have a look at this, you won't even believe it. Look at V. This is Visa. Leg E in the monthly at an all-time high. Leg E in the weekly at an all-time high. Leg F/A, I don't even know what it is, because the previous peak E back in mid-December at about 321 pulled back very sharply to the 304 level, and then it went back up. So the starting point was this. It wasn't an instant restart. It was an actual pullback and gap. I was asked to talk about this the other day, and I completely forgot. Now I just remind myself. Yeah. So let me just say, look, a gap in the Chapman methodology doesn't mean a thing, because if it goes higher, that continues as a leg of whatever it is. This is a leg A, becomes a peak A. Look at Visa. Is this a brand new leg A, or is it an old F? And you hear all these stories about the credit card delinquency rate and all that. And look at this, it's still going higher. So let's just do American Express. These are different companies. They do different things, slightly different. This has gone to a peak C and has pulled back quite sharply from an all-time high at about 326.28 on the 23rd of January. And GSASC in the weekly chart, because I have an alternate count because there was an instant restart back in October. Fantastic. All-time high, pulls back about, 20 points? 10 points. 10 points. Let's go to MasterCard, MA. MasterCard, as we're looking at it, all-time high. Oh, man, do I have to renotate this thing? How many 100 times have I done that? All-time high, as we're speaking. Is this a brand new leg A to the upside? And the weekly chart, what is that? Fantastic action. I have to tell you, I like what's going on in the market. I don't like if we're in the wrong area, but I like it. I like just looking at the charts. I'll be right back. Basil Chapman, Dow's up 102.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Sam Ross in the Tiger's Den asked Basil if there are no stock-specific requests. There are, Malik, but I like your question. Would love to get your thoughts on current view of socioeconomic mindset of current market. I wonder what kind of stock action or crypto action is going to get the modern shoeshine boys all in on the market. I feel like your coda phase is still yet to come, even with these huge gains last 5+ years. I could actually have written that. I love that question. A question that I said that I'm going to start dealing with over a period of time. There's no rush. I believe this. So number one, just yesterday I'm saying to myself, last week I mentioned IPOs and there was such a lack of IPOs. Wherever do you get a major market top where there are no IPOs, where it isn't announced that there's going to be an initial public offering and the stock pre-market before it's even opened is speculated to be up 100% from the initial price, the offering price, number one. Number two is stock splits. Anybody looking at stock splits? I mean, what have we got here? What was I looking at yesterday? We're looking at stocks. Is it AZO? Yeah, AutoZone. There you are. AutoZone. 3,374 round number 00 right now, up $1.18. This is, to me, there are so few signs of I'm talking about, when I say major top, I'm talking a top, not like 1929, but at least like some of those 50% declines that we've had over the prior 20 or 30 years. So within that context, I don't see it. That's not to say like yesterday something couldn't come out of the blue and just whack the market. And it could even have greater potential for disruption. So I'm just talking about the major things. There's an announcement that was made was it last year? I can't remember, about a new skyscraper, the United States of America's tallest building, being built in, was it Kansas City? Was it Kansas City? Something like that. Just a very flat area, and you're going to suddenly get this new building. And I don't think it's actually been started yet. I'm not sure. So within that context, I just wanted to say that's a great question. And when it comes together, I'm convinced in this era that there are going to be people who have never been in the market before, us fuddy-duddies who have been here and work very hard and do diligent work, et cetera, et cetera. There are going to be some people that come in and absolute novices, and within days, but let's just be a little conservative and say weeks or months, become multimillionaires, and just like in 2000, will lose everything. But we haven't seen anything like, will it be through crypto? It's always a subsidiary thing, but I believe that we're in this formative stage, and I don't want to go further than that. The other things that I could say, I'm going to hold it back. I don't know how long I can hold it back for, but I will hold it back. But I'm just saying, I don't see those things. It's a great question. And I like to be reminded about it. I've spoken about coda phases before. For a long time, I spoke about coda phase, and we've had phases of the coda phase. We haven't had the big coda phase. And when it happens, it'll be worldwide, and it could be a disruption, an electronic disruption that adds a zero or takes away a zero from everything that's computed in the financial world. Who knows? Or the dot just gets replaced. I don't know what it'll be, but that's what I'm anticipating. We're not even close. All right, let's get back to the market. So with that said, I'm anticipating that we come right off the lows today. I'm very upset. I actually thought I'd gone along right at the lows there, and I was so busy with everything else going on, I didn't even check, and then I see that I didn't actually place it. Just too many things going on, newsletter and all that stuff, and then the beginning of the market. Anyway, that's the way it goes. Now let's just get back to what's really important here. Look at gold. Gold right now is up 22, maybe $23 at 27.61. You see the way the monthly chart has just been improving slowly. And look at this cup formation, which says, yep, you could go slightly high and make a double top peak. This is a weekly chart, so maybe this week we don't go to the high of last week into the 2790s. What was the high exactly in the continuous contract? It was 2794.8. We just missed that, and today's only Tuesday, so I'm talking about maybes. So, and then the following week we go to a leg D, and then maybe gold takes a little bit of a breather, right? But in the meantime, it's acting so well, but within a confined rectangle. In my webinars, I've done webinars on this large rectangle, the large rectangle, narrow rectangle. They are different animals altogether. Right here, you can see there's a whole panoply of what you look at. All the parameters that you look at in the long, narrow rectangle, what happens? We saw one of those actually last night. And then the large rectangle has something different. It's a different vernacular that you're in. Once you're in the large rectangle, having gone sharply up and then pull back and then started to move to the upside. So this fits perfectly. The one that says higher highs and higher lows goes just on, or just above the previous major high. That was the high that I mentioned, 25.9. That was made back 2 months ago, and it pulled back, and it should get close to just over. And then at any point after that, if you take out the halfway marker of the rectangle, if you close on a daily basis below 2720, let's make it 2700, you're liable to go all the way back down to the lower part. It's all a work in progress, nothing to see. Right now, silver is actually having a decent day. It's up 40 cents. But look at that, 200-period moving average in the daily chart, just glued. It's struggling to get away from it. So gold at this time is much stronger. High-grade copper is trading up today at 4.27, up 0.03. nothing to see. It's just kind of stuck in a range. Let's go. We'll do that. Let me just do this plat. No, it wasn't plat. It was PALL. PALL, platinum, had a wonderful move, went to the 200-period moving average. I was discussing this the other day at 92.04, and now is pulling back quite sharply as platinum. Let's go to that's palladium, Aberdeen Palladium. Aberdeen. My friend who at school, my best friend, and he was also the best man at a wedding, emigrated to Australia. And he there became really successful. He started the Aberdeen VIX, VAT. Oh, VAT. That's the VAT. Is it still here? VAT. Oh, they must have sold it. VAT. All right, it's not there. It used to be VAT. VAT. Almost sure it was VAT was a symbol. It was the Aberdeen Fund bought his fund. It was really interest rates, Asia Pacific in. It wasn't dividends, it was really interest rates. That's how it was based. All right, let's just go. We've got the Dow right now up 144, 148. Very nice. Legacy continues. I'll be back because we want to see how is it possible that the S&P can still do it? I think so.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So giving a boost to the Dow is Boeing. Boeing's looking good. It was on my list today from our subscribers. I said, but we didn't choose that. I wouldn't have actually got it because it gapped up. I didn't realize it was going to gap up. Gapped up sharply. I think it's improved a lot. And Boeing is up 12 at 187. In the den. Yep, it sure lives. So FCX is the next question. FCX, there we go. This is Freeport McMoran. I'm having trouble with this. Copper is telling me copper is not like every single one of the icons that we had used for decades changed. They used to call it Dr. Copper because it was a leading indicator on international building, the growth, economic growth. It's not quite the same anymore, but it's just not acting very well, right? So SCCO, I know you asked me about Freeport McMoran. It's underneath the 200-period moving average of 37.87. It's at 36.33. It has to climb and close above 39.36 is the pink 9-period moving average. It really can't do that. It has to close above the black 14-period moving average, which is 40.60. It really has to close in the 41 to 42 area to say Freeport McMoran is now starting the tide has changed from down to up. And at this point, it's still down. And the monthly chart, look, it broke that major support level. Chapman Wave Inside Track propellant zone is now repellent zone in the 42s. It's not acting well. So let's just look at SCCO. Wow, also very weak. So something's happening. There's such a divergence. I mean, look, that's the building area. So if you go to wood, the international, I usually do copper and wood, the iShares of the global forest, global timber and forestry ETF. That's starting to rally very nicely. Peak A, peak B, it's in at leg C. Right here, it's pushed off the 200-period moving average. So there's a dive, and look at the way it held this beautiful channel support in the monthly chart. And look at Builder. BLD is the top build corporation. It almost looks like that wood, the iShares, timber and forestry ETF, went to the 200-period moving average at a peak E and pulls back. So as I see it, this is very specific. So your question is on FCX. It doesn't look good, and I think you would like to know where I would see support. Let me see support, right? Let me go to... Can I do that? I'll do that. Here we go. So I'm going to go to my automated. So this is Dow 3 times. This is daily, weekly, monthly. I think that's it. Let's hope it is. Let's see if we can get there. There we go. This is the way I've got the Chapman Wave automated support and resistance levels. And it's coming up right now. I see the little hourglass. Tickety, 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 tick. Or tip, 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 tip. A little sand goes from the upper glass to the lower bubble, and you've got it. Oh, wrong one. Oh, that's the right one. So this is right there's Hood, Robin Hood, doing better today, up $1.89. Let's go to FCX. So the daily hasn't got any support. The weekly has 36.74 to 36.10. And we're trading at 36.41, and the 120-minute chart is 35.46 to 34.93. Those are key levels that need to hold, because if it doesn't do that, 31.38 is the month, or 34.46. If it goes right through the 34s in the monthly chart, 31.38 is the next level of support. I'm just saying to you, that's the way it is. I don't see any support. Now, there are measured moves I could do, but let's just say it's at 36 right now. The area of 34s is going to be absolutely imperative to hold. Hope that helps you. Next question came in, and I just want to go there. Yep, next question came in. So that's FCX. Sharp, yeah, Flash. Sharp is trading. That's another one that I would like to. I would have missed it again. It was also on my list. Wouldn't have got it today, but today was the day that I thought, all those recluse, the ones that were on the way down, they were not doing anything. and then that spectacular run late 2024, and then they've had a December to January pullback. Shopify is one of those great. Look at this, up 8. Is this bear market material? Shopify, customized online store platform? No, I think this is outstanding. This is the rotation we wanted. We wanted to see the whole area of tech slow down, its move to the upside, and give everything else a chance. And that's exactly what we're looking at. Yep, Shopify is doing very nice A, B's, and legs C. Next question came in. Okay, next question is going to be NEM. Oh, very good. Completely forgot about this. NEM is Newmont Mining. I remember I did this and then I shut down suddenly, so I lost some of the data. DE. It went to a peak E 3 sessions ago in the 4280s. Now it's pulled back, but the 9 is over the 14. Yes, Newmont Mining, I would put this in the category. Monthly chart is horrible. Weekly chart is just one step above horrible. And the daily chart is really, and the only way you're going to get the weekly and monthly to improve is if the daily chart really starts to move better. So it's acting well right now, Newmont Mining. The manganese stochastics pull back from in the 87% to 80% area. On balance volume is not that great. Retro strength is weakening. So I got a feeling, that you are in Newmont Mining. If you are, I would say, holding very nicely, what you want to see, 1, 2, 3, 4, that takes me to, excluding today, Wednesday, Thursday, Friday. By Tuesday of next week, if it hasn't taken out 39.50 as key support, but instead is pushing above 42.30, and I'd say that needs to be by Thursday of this week, then by Tuesday of next week, if it takes out the 42.85 high 42, let me get the exact number, 42.85, yep, 42.85 high of the 24th, the moment it starts to trade, it doesn't even have to close, but if it starts to trade at 43.50, the 43.94 200-period exponential moving average number becomes the magnet. So it went right. Remember, look, I talk about 200-period moving average as a support resistance line. Look how it went right through, but then it had to test, and it couldn't make it. It failed. So back in late October, early November, it went from 58.72 straight down to the 46s, and then it broke down and went all the way down to the low of 36.86, and that was on the 31st of December. So this is a nice move, but when you consider that it's gone to peak A, peak B, peak C, peak D, and it's only gone from the 36 to the 42, a nice percentage, I'm not complaining, but look at the big moves it's had before when it's had peak A to peak D. So this is a small one. I'm saying it's actually gone to E. So that's what I need to see. If it starts to trade under 40, let's make it 40. That says it stalls for a little while longer. I'll be back. Dow's up 164, S&P's up 33. Nice action.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I was asked about Microsoft, the diamonds, has your 4-5 with beer, Microsoft, Amazon, Microsoft, and other names. Yeah, so I'll go through what I can roll. So look, Microsoft, you see this pattern right here where you go to the cup formation, but you fail at the Chapman Wave inside track repellent zone. Then you come back. If Microsoft, and this is what I've been talking about in this rotational aspect, and I'm not sure anyone, I read quite a bit about it last night, not that I even understand it fully, but about DeepSeek. I asked my son, this is kind of his field for his startup. It's a little more than a startup right now. But he said, if this open technology, he said that would be great for us, but we won't know. So it seems to me that it's a work in progress, and Microsoft has so many other things going on that I'm looking at it and I'm saying, well, at what point is it going to break the 452 level to attempt to get to 456, which was the high of December? And is it able to do that? Is it able to even get, I never typed it in, to the all-time high of 468.35? Let me just type that in now. 468.35. And I think so. I think it's going to, look how it filled the gap from yesterday. Look at that beautiful candle that went all the way down to the 423-ish level and then closed up at the 434. Now look at it at 441. So we've been long for quite some time. Let me actually just check. I always say we've been long, but I know, shouldn't know the exact date because we're looking at it all the time. But just, so many things to look at. Yeah, since 338.00, October of 2023. So that's October of 2023 right there. And I've stalled a little bit in saying, right here, along. Let's add a trading position. And the only reason why I've stalled is because I know at this particular point there's a lot going on, and quite a bit of it involves Microsoft in the area that Microsoft's in. But I like to say the chart is telling us what's good. And I've been saying for a long time, after the high 468.35 back in July of 2024, of last year. We dropped to 385, and then we ran up, peak A, peak B, peak C. This pullback that was 3 weeks ago was a little bit too deep, but look how quickly we've gone back. Look, the 9-period moving average never plunged to pink on that move, and that says good spring to the upside, and that's exactly what we've got. So when you're looking at Meta, I know Rolly asked me the Dow stocks. Meta's making an all-time high as we speak. It hit 675 today, 0.48, only in leg C in the daily chart. So this corresponds to what we're seeing in the Dow, leg C, but not an all-time high in the Dow. The G/C in the weekly, D in the monthly. D is the objective to get to a D in the buy signal to buy mode, and that's what I'm anticipating for the Dow. So that's matter. Let's go to Goog, and I always do just Goog, not the trading stock. Goog Alphabet C stock made a peak E right there on the 21st at 203.84. And it's just kind of digesting the gains, but it does look like it's a stalling pattern at this particular stage, all-time high, and it's going to leg F maybe. Could be an alternate count because it was an instant restart within 3 bars. I always circle it right here. So I'm looking at this and I'm saying to myself, even in the MAG 7 area, you've got such an interesting thing going on. Netflix makes an all-time high, 999.00, 5 sessions ago. It's trading at 963. Hasn't even hasn't gone into under the low of the gap up high. So I don't see this as the end of the world at all. I see this as a rotational correction, a fabulous rotational correction, and you never know what's coming from the outside, and that's the way I'm looking at it. Now, the question was on the diamonds. So the diamonds trading right now in leg C, extending the up move, but also like the Dow. Once in a while over the decades, I get a peak C in maybe the diamonds and a peak D in the Dow. Sometimes I get a peak D in the diamonds. I don't get in the Dow, but on the short term, I'm saying that's a sell signal. Let's go with it, and it works out. But nothing like all-time highs at a peak C. So we've got a leg C here. 451.55 was the all-time high. We're at 449.18. To anticipate that this V-shaped pattern isn't going to at least tag that all-time high, I don't know. We had bad news yesterday. What more bad news can we have today to continue that sell-off? I don't know. I think we're going to go to a higher high, extend leg E in the monthly chart, and that would be a D/C. This is not Technical Friday. I would go into the G/C. I'll just say it. When you get a G/C after an instant restart, and there's a very good chance that if you go to a D, if it's going to be a powerful move from there, and it's taken a long time to go from that G/C down and then back to what is either a D or a brand new A, you very often get an instant restart in whatever time frame it is, and you continue higher. So all I can say is at this point, unless in the next 2 weeks there's a close under 436 in the diamonds, certainly can happen. I love what's going on. That's all. I don't know. Maybe I'm a little nuts in looking at it that way. So I hope that helps you. And now we've got that rotation. We've been talking about this, for about 3 months. I said, I see the SMHs in a sideways, it's more than that, sideways move. I think it's telling us that there's going to be a big rotation in this market, and that maybe we will finally see stocks. Caterpillar got hit yesterday, but it's probably coming back a little bit today. Not much, but it took off from its low in the 350 area. It's at 391. It hit 410 just the other day. So are we looking at now a rotation? Deer, look at this deer. Is at an all-time high. Leg C at 483. I'm sorry. The way I'm looking at this as still very positive, but it is selective. And as a result of being selective, how we come out of this is going to tell us about the whole 3 months coming up. And that's going to be very important. Okay, next thing I want to look at, question came in. Here we go. Yep. Oh, FXI. Could I look at FXI? That's the China large cap. FXI, of course, with tariffs and everything. How's it doing? Well, it made a lower low 4 sessions ago, and now it's in a brand new leg 8 to the upside over the 200-period moving average. I think even China's saying, we'll survive this. We're going to do okay. We've got our own economy to worry about. But at this particular point, it's saying that the 200-period moving average of 28.86 is a springboard for a move up. It doesn't tell you how high it's going to go, but it says that the magnitude of 200 at 30.85 in the weekly chart is actually now just starting to look like it could be a propellant. That's an FXI. I'll be back. That's the chapter. Tiger missions are Dow's up 231, S&P's up 34. Very nice.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yes, sorry, I was asked about it earlier and I completely forgot. I'll do it right now. So, Bitcoin, BTC, and the reason why is that I had my keyboard. I used a tiny little keyboard. I don't have the extension. I have a spare that just the other day, I had it for about a year over here, and I took it down to the basement. Said, I don't need it. And all of a sudden, my keyboard wouldn't go. I couldn't use the shift key, so I couldn't get at. So yeah, so Bitcoin is up 1,405 at 102,900. I think Bitcoin is in a trading range. It's in a sideways. We haven't taken anything away. We've had a really good run with our iBits, that's the iShares, And I haven't added to it yet. I don't feel strongly enough that I want to add yet, and I don't want to take anything else off because we've got a really nice core. We've taken a little bits off for money management, really good gains. I mean, I think it's 38 and it's in the 50s. But at the same time, I haven't added to it, and I'm looking at this, and I'm giving it just another 2 or 3 days to see if IBIT actually stays in this like rectangle sideways move or not. So let me just do this before we go anywhere, and I'm going to hand you over to Steve Rhodes. I'll be back with Jacob a little later on this afternoon, and we've got the VIX is down 93 cents at 16.97. It had a big spike into the 22s, and now it's pulled back. And that just says to me, the fact that it's holding in these highs above 15 says, don't ignore things. You still got to be a little careful. But the way I look at it, this is a culminating. It's a D. It actually is a peak D, and I don't like to do that with the Chapman methodology. The only thing I don't really use it on is in the VIX, the volatility index. But when I can notate it, I notate it, and it happens to be a D. So all I can say is the VIX index pulls back later today to 16.34 or lower. This market will scream to the high of the day. But that's what you got to watch. If it suddenly pops to the 1730s, maybe it'll slow down. I like what I see right now. There's some people shoot first and then ask questions, or whatever the expression is, or sell first and then ask questions.